Hello, everyone. Welcome back to the webinar with Ben and Cata. How are you doing, Cata?
I'm doing great. I'm just happy. I mean, I was thinking right now that actually this should be like Happy Thursday, because every Thursday we have our
Thursday.
webinar.
Yeah. Actually, well, no, you remember when we were working together in the office when you were
Yeah.
living in America? We had the Friday afternoon drinks.
Oh yes, with the pool and ping pong table. It
Yeah.
was a crazy. Yeah, it was amazing. Yeah, that was a really good time.
There was I don't know if it's a typically Dutch thing to do, but the Friday afternoon drinks was a very it's a classic, right?
Let's say that in US that's not something that you will see for sure. I think it's more the Nordic countries that have this, Netherlands, Sweden, Norway, Finland. I think all the Nordic countries, they have this type of of thing for the colleagues, basically for the employees, where they have to feel well, and feel being part of something. And I think that's what we were doing those Fridays. We're building connections and making friends and have the good time. Because in
Talking
the
about
end-
crypto a lot.
Oh yeah, I think exactly. This is how I entered in crypto actually because of you. I remember even now. I was just joining in 2016. I'll never forget that. And everybody was. I was coming from Spain, and in the office it was Danny. I remember because he was in front of me and he was talking about Ethereum, and I did not even know what Ethereum is. And then I heard about you because actually, you were when we were developing the crypto-based scanner, so it was quite nice. But yeah, probably it's a good topic for later or for other sessions. I think it was an amazing period. Hello everyone, glad to have you here with us. So yeah, I do hope that today we're gonna also provide some useful information. And if you have any other questions, because today's topic, it's about trading psychology. So Ben, maybe you can take the lead here. You're the most experienced one, so that means that you also are the one that have the highest failures and learnings.
The most amount of failing trades. Yeah, no, I have my fair share of failing trades, of course.
Yeah.
And yeah, psychology for me, poof, that goes back to the bull run of 2017 actually. Like when I first started dipping my toes into crypto, and the first run to, what was it, 15,000 or something like that happened. And I was like, oh God, I need to sell now because this is such a big ramp up. But I just kept holding on, and I said, if it reaches this level, I'm gonna sell a third. If it reaches this and it never did. And actually it then crashed all the way back to the 3,000 level, and I basically was below my entry again, which sucked, of course.
No, but if you think about it,
and how long did that take? Let's actually get the chart up, because people are here to watch the charts, right? Come on, we're here for the charts. Show us the charts.
Show me the money. Okay.
Let me find the right button. She said.
My God, that market is really like, we are in a perfect market to talk about trading psychology, to be honest. Yeah.
Yeah. So let's look at a day. Oh, why have I so many? Oh yeah, I was playing with the things last time. But I was in here, and this chart doesn't even go back that far. But yeah, I was here and I was like, oh, I need to sell when it gets to like 19 or 18,000. I don't remember exactly what it was, but it just barely missed it. Like on a day, it wasn't like New Year's Eve or New Year's Day. I don't remember what it was. But it was like that, and I was like, told my wife, like, I'm gonna sell soon. I'm gonna sell a third, and then we've made a lot of money. I mean, that was a lot of money back then. Nowadays, it's crazy money, but yeah. And then, as you can see, the price dropped like massively, and it never returned. And it took Ooh, I don't know
Sometime.
if I want to know. 3 years to get back to that level. 3
Yeah.
years.
But
Those were 3 long years, I can tell you that. And luckily, I had learned. Like, I had learned from my mistake here. And when this dip happened, I did make sure that I accumulated more with the Bitcoin that I already had. So I was buying and selling, making sure that I was accumulating more Bitcoin. So by the time we reached this number, I was already in more profit than I was here. So that was a better thing. So I had learned from my mistake here to make sure that that you always play with a little bit of money, right? You don't want to be holding on to a position for too long and not actually being in the market anymore, or not participating in the market anymore. Basically, if you're just there for the investment, you're just holding, then you leave it up to chance for what the market does, and in the long run, it'll pay off. But if you do use a little bit of money, especially in the Bitcoin market, you can easily get like 4 to 8% swings. One of my Altrady favorite fan users, and he always helps me out with testing as well. He said to me like, "Oh yeah, no, I have my 4 and 8% Bitcoin trades set up all the time, and I just sell for like when it's 4 or 8% up, and I buy when it's 4 or 8% down, and I keep readjusting that." And it's a good strategy, it works over a long period of time. It works.
so now that you're talking about strategy, for example, what strategies do you personally use, for example, to stay ahead, during all the volatile markets? Because that's when the emotions are at the highest level, I assume.
Yeah. So, well, actually now, so obviously, I have my crypto base scanner, signal bot running, which allows me to get into the markets, and only manage the ones that go bad. Most of the time they go well. So that's what I do most of the time. But now, I don't know if people have seen it, but we also do another webinar about the smart money concept. And that's something that has really piqued my interest, because for a long time, like the crypto base scanner, I'm going to be honest about this, that is not something that you could trade daily and have fun every day, because they work in waves. Like if we look at the charts here, this is several days down and then up, and that's like, even this is a day chart, but the base scanner trades would could typically last that long, just because the time frame is set to 1 hour on where to find the bases. Now, I've experimented with the base scanner on lower time frames, but the back tests weren't good enough yet on the 5-minute charts. 50-minute charts was a little bit better, but there's still a little bit of tweaking to be done in the algorithm, which I haven't had a chance to look into, because we've been swamped with other things. But the smart money concept is something that doesn't necessarily require a scanner, but does allow you to trade more often during the day. So that's something that I want to learn and start using more often in day trading, because I want to trade more. Like I actually want to do several hours of trading per week, but then in order to do that, I need to have a strategy that can actually be traded on smaller time frames, so that there's actually something to do within those hours. Otherwise, it's just still position trading, long-term trading, and that's, let's face it, that's just boring. Like it might make more money, but it's just boring. And if I want to show you how to do trading on the smaller time frames, day trading, then I need to be comfortable doing that as well. And that's something that is going to test my psychology in trading again. So yeah, if you ask me like, how do I manage my psychology right now for the current trading? Well, not now. I'm basically in rinse and repeat mode, and it just doesn't bother me anymore. Like even this crash of Bitcoin, it doesn't bother me anymore. Even my long-term position, which obviously took a big hit from the top that I hadn't sold yet. No, I'm not in.
Yeah.
I what am I doing?
Emotions, huh?
There we go.
Yeah.
Yeah, 24% down from the top. You know, that stings a bit, right? But it's not nowhere near 75 or 70 or 80% from the top, right? So this is what we're used to. This is what we've seen several times already, and then we see this recovery. It just takes time, right? And time is all we have until it runs out. But this run was fun, and now we are just expecting another one. Like, I don't know. I was talking to Roman about this as well, with especially with his knowledge around smart trading and smart money concepts. And obviously he's not an expert yet, but it could be that it's going to test down here. But as we've seen in this one where it went down, it didn't go all the way down until much later. So are we in the same situation as here where it will do another push? Well, if anything, I'm ready for it. Because as soon as the price tops the all-time highs again, I'm going to be selling. Like I will not sell everything in straight away, but I will start selling my long position. So the position that I started right here, I will be selling that. And for me, that's I hope that it happens. I hope it's not a repeat of 2017 where I saw this peak and then the peak happened again and then it crashed. That's exactly what happened in 2017. In 2021, we actually had another run, and then by the end of the year, it fell down. So hopefully we have the same thing, and by November, I can start selling, and then hopefully do well enough to get accumulation. Around 60,000. I don't know how far it will drop, but
yeah, we'll see. It's interesting, Ben. Just one thing, because what you're talking, it's about emotions, but also we are talking about intuition. Because you look at the chart, you have the experience. So I think this is a challenge to everyone. Because you have that intuition that something will gonna happen, but then you have the emotion, the impulse that you have in that moment. How do you think we can differentiate? I don't know if you thought about it, but how really we can differentiate between intuition and emotional impulsivity? Let's put it like that.
Well, intuition is something that comes over time, of course, right? So you have to wait, and you have to practice, and you have to do a lot of back testing. Especially if you're testing a new strategy, then that's something that you're gonna have to do. And then as soon as you're comfortable with a strategy using fictional money or paper trading, back testing, whatever, that's when the psychology starts to happen, because there is something that happens in our minds. I'm not a psychologist or psychiatrist. I don't know exactly what happens, but as soon as real money is involved, even if it is just $10, your psychology changes and you start to make decisions that you didn't in your backtest. Or in your backtest, you would have been overzealous and you would have been like, YOLO, it's not my money, and I can just hit reset and see what happens if I do this with real money. But if you do that with real money, then you would actually lose it. There is no reset button, right? You're going to have to start saving again. You're going to have to sell your Lambo if you already had one. And you're gonna have to start all over again. So the trick to manage it is first get comfortable with the strategy. Once you're comfortable with the strategy and you start to do the real money, that's when you need to have tools that allow you to reduce your emotions, right? And one key thing to reduce the emotions is to just walk away from the chart. If you're staring at a chart, fear will kick in. Like,
that's a good answer. I mean, I think that's probably the best approach. However, I know what I have to do, but what are the signs that tells me that I'm in a FOMO situation? Like I'm scared that I'm gonna miss that trade. When I identify those moments and say to myself, okay, I know that I have to take or get out from the computer. So when do you think we can find those moments that we identify them as crucial and is like a red sign and say, okay, now you have to leave the computer or whatever you're doing?
Well, I mean,
It's not that common.
I think especially for myself. So when I realize it, and I've made a mistake. When was
Yeah.
it? A few years ago, I was trading on Binance Futures, and then I hit the wrong button, and I actually went all in a position that was tanking. Right, so
Whoa.
I was like,
Okay.
oh my God, what did I do? And
Yeah.
basically, you get that feeling. So maybe when you go to the doctor or when you go to the dentist, you get that feeling in your stomach where you're a little bit like anxious, nervous, and you're like, I don't know what's exactly going to happen. That also happened to me in that situation with trading. So the whole day I spent hours and days, or like the whole day, I spent to make that money back, and I did, but it wasn't healthy, right? So I kept trading on the minute chart, buying and selling until I had my $600 back that I had lost. Basically worked a day for nothing. I lost 600, I made 600, but that day was not fun, too stressful. And basically, in theory, you should just take a loss and make it back on another day. If you do something stupid, don't fix it by doing something even more stupid, right?
Mhm.
I never traded, especially then, that was years ago. I never traded on the minute charts, and then all of a sudden I started doing that because I thought that that's the only way I'm going to get my money back.
So probably that's a good mental exercise, to tell yourself, okay, I've done a mistake. It happens. It will always happen something.
Yeah.
And assume that, and say to yourself, like, look, I know that I fuck it up. I know that it wasn't a good trade. However, this is done. I cannot repair anything. Let's move forward and try to think things thoroughly and pragmatic.
Exactly. In that time, I wasn't consistently profitable anyway, so I was still searching. It's all about it really starts with that strategy. So starting your disciplined trading routine, right? So start with your strategy, determine your entries, determine your exits, and then use a tool like Altrady to manage that for you so that you can walk away. I can actually show you an example, I think, if it's still there.
Yeah, go for it.
Yeah, so let me enable these again. There we are. So just before the live stream, I saw this one and I thought, oh, this is going to be a perfect one. Because if we remember from the last stream where we were using the Bollinger Band and the RSI indicator and the MACD to enter the trades, with the quick scanner, obviously, I had found this setup, and actually this would have been the entry, right? But I noticed this market several minutes later, or like even further. How many?
You're on a 5 minutes time frame?
50 minutes later. 50 minutes later, I actually looked at it, and basically what I saw was like, okay, so this happened, then the price consolidated and moved to the middle line of the Bollinger Band. This is gonna go now back up, right? So the strategy is to enter here, but my FOMO, if in that situation, thought, you know what, this is there. It's gonna make that move now. The all these things happened. It broke out 3 times. RSI was good, MACD was good, everything was good here. So this would have been a great trade. This would have been a trade that would have gone up. So I'm gonna enter here, but that's wrong, right? That's not your strategy. That's FOMO, right? So this trade should have never been taken. This is not how you enter the trade. But this is what a lot of people do, right? They see the trade happening, and then maybe if it's your first trade of the day, you think like, okay, well, I've just spent 2-3 hours watching the charts or watching the scanners, and I don't get any hits. Well, I just found this one. Might as well take it because this one is the best one of the day. Wow. 10 minutes later, stopped out, done.
Yeah, but you're talking about something extremely important, and that's patience. And patience when you have, emotions and that fear, It's extremely hard, like really, really hard. So that's why probably you need to have a very good strategy and stick to it,
Yeah, I mean,
regardless of everything.
especially with the patience. It's better to not trade for a day than to take these silly trades, right?
Yeah.
This was a silly trade. Now, luckily, it's paper trading, so it doesn't matter. But if this was real money, you'd be not happy. I don't know how much I lost actually in this one. Yeah, $16. Well, in a few hours or a few minutes actually. So that's not good. Then I have another one right here.
Okay.
That also was stopped out. Awesome. Why was it stopped out? Probably because of the wick. Yeah. The wick happened too fast. That can happen on a 5-minute chart. So here as well, again, no patience entering. RSI wasn't there. Set up the ladders like, okay, well, if it keeps crashing, then I'm gonna get in. Okay, but you know, the move is not over yet. Like the MACD is not crossed over yet. Why would you get into this trade? Doesn't make any sense, right? I did it better because I spread my entry out, so my loss is less. But still, this was an unnecessary loss because I should not have entered this market.
Yeah, I think this happens to me a lot of times.
Because you're also trading, right? So how do you manage it?
Well, now way better than when I started. However, I still do mistakes, to be honest, and that's the reality. I mean, that's why I was asking before about the intuition and all that. Sometimes you're not thinking clearly, depending of your day. We have days and days. So what I start to actually do in the last period is like try to stick to my own strategy. So I'm doing exactly because we were talking about this together in the office so many times about like how we are gonna how we manage our emotions, what are the best strategy, how we can move forward. So right now what I'm doing is I'm actually when I'm not if doesn't fit my strategy, I'm out. It's simple as that. Doesn't matter if something turns around and maybe I lost a lot of money, doesn't matter, because if I will stick with that strategy in time, that will gonna provide me that percentage that will make me profit. I'm not. It's a huge problem, and that I see actually with people when we are doing our onboarding calls, where beginner traders they look for that type of coins that they're gonna provide 1000x value.
Oh, that's nice. I want those. Where can I find those?
Yeah, exactly. and the reality is that that's probably harder than a jackpot, than a lottery ticket. It's extremely hard to be so damn lucky. There is not about science, it's about luck, okay? But if you want to trade, then you have to do it more or less probably daily. However, to stick with your strategy and don't think about that. And all the time they were like impatient and they were telling like, look, then they will show me the charts when I explain them like how they to place the smart trading. They will tell me about the market. And I was telling them like, okay, for how long have you studied the market? Do you know even the basics?
Mm-hmm.
That's the first thing. Do you know the different types of orders? And the only thing that they were talking about, and I understand why they were doing that, because we were doing the same at the beginning, is because they were seeing a number on a chart that is going up, and he was doing in his head or on your computer on the calculator, okay, if I bought 1000 coins of that, now it will be 1 million. And that's the only thing that matters in the head for all the people.
Well, that's the same for Tesla, right? If you bought it in low enough, exactly. You would have been a millionaire.
But that's how it's, unfortunately, it works. It's working for many of us at the beginning, and the reality is not that's bad. Let's put it like this. That's a bad approach. Why? Because you don't have a strategy, and not having a strategy, that will lead you to losses. Because then I was asking them, and how you done with your trades? It's like, I lost a lot. It was like, okay, because you don't have the basics, you don't have the fundamentals. Stick with the plan. And I was telling them, use the paper trading. We have the paper trading. It's for free. Use that. learn the basics, learn how to trade, learn how to read the chart, manage your emotions, and then play with money. You know. So yeah, it's interesting to see, you know, and on the other hand, it's easy to talk about it because when you are in that moment, in that second, that specific, you know, market, it's hard. However, that's why we are having these calls and try to educate people and from our own mistakes or mistakes that we are doing even now, some maybe way less than before, just to have that strategy. And this why I'm really happy about having the webinar with Roman about the smart money concept, because that's something that works.
Yeah.
That's something that has behind it, and Roman explains it so well. I mean, it's really amazing, and it's something that will help you with that. It will help you managing your emotions and have a clear plan and structure.
Yeah, because yeah, well, a big part of that strategy as well, and what we will be showing on later in the webinars is the importance of keeping track of a journal. I don't know. Does anyone keep a journal on the chat? Do you actually track all your trades, and do you write down how you felt about it? Did you write down? Did it meet all your criteria? Did you follow your strategy or not? Because that is super important for my investment / position trading. Like for the base scanner, I don't keep a journal because let's face it, everything is done automatically, and I don't need to journal. But for the smart money concept, journaling is going to be super important, because that's the only way that you can learn a strategy properly. So what I can show you already is that, for example, we would use a template for journaling like this. And we will leave a link in the description below where you can duplicate this and use it for yourself. I see someone said that they're not doing that yet. Well, it is important to start doing journaling if you have a strategy and you want to improve your strategy. And what does it mean to keep track of a journal? So basically, you write down the trades that you have. So obviously, you have the base scanner, or you have the Altrady positions list already there, and that is the first step. Like, you could analyze your positions in there, but then it's also good to expand on it a little bit. Understanding well, first you mark the market, of course. You say if you go short or long. You determine the setup, and within the setup you decide to. It doesn't matter. This is for smart money concept trading, but it doesn't matter what your strategy is. If you have a specific setup, if you have, well, in this case, like for example here, you have the 4 hour 50-minute time frame. This is something that you could just add. Like once you duplicate it, then you can actually add it, all these settings. It's just like Excel, very intuitive. And then you can just add the criteria for that. You could set up your risk reward ratio, your risk percentage, your risk reward ratio. If you use the take profit, stop loss, or if it was a take profit or a stop loss or a break even, you'd log down your P&L. So you copy that over from the position info. And this is something that Roman uses, so you can see if you do better in certain sessions. So for example, if you're trading early in the morning, then maybe the markets from Asia are good for you, or you trade the European markets, or you trade the New York market times. So we're not trading the markets, but we're trading the times of when the markets are active. That's when a lot of traders are online. That's when a lot of day traders are trading. So you could keep track of those sessions and see which ones perform better for you. And you can track the duration of the trade, of course. But then also you can open it up a little bit more and then add information onto why you took this trade. And analyze first, this is just part of your setup, right? So you determine your entry, you determine why you entered this trade, you wait for the confirmation, you find your targets, and then at the end you show the result. And in this case, this was a good setup. And this, if you look back at it, so after you've collected this for a month or a week, you can collect all that information and then actually improve it. So you can just look at the data and say, okay, well, if I use the 4 hour to 15 minute, it works really well. But if you have several of 1 hour and 5 minutes and you're constantly losing on that, then you're telling yourself, okay, maybe I shouldn't trade those setups anymore. Maybe I'm better off sticking to the 15 minute and 4 hour time frame. Right? So that's the only way to learn. You cannot improve, you cannot control your emotions unless you actually have some data to back it up, right? If you have a template like this, if you have the journal like this, then you can base your decisions on data, not emotion, right? That is the important. So we're constantly trying to find ways to reduce emotional decisions and increase decisions based on data, right? And especially when with Altrady, with the ability to set up these trades. So you've done your checks, you've done your analysis, you're done with that. Then you take the trade. So you decide your setup. So I want to buy here. Not sure if you want to, but I want to buy here. I want to sell there, and I want my take profit to be there. Right? I go over to Notion. In this case, I log down what my risk reward ratio is and what my risk percentage would be, saying, okay, no, it should be 1%. Fine, risk reward ratio 3. You log that in. Once you're done, happy, you set it, and you simply walk away. Like, find a new market, go somewhere else, walk the dog, play with your family, do whatever you need to do to not stare at that chart. And if you're day trading, go find another market, right? So Altrady is also there to allow you to trade a lot more, right? You can open up plenty positions because you know that they will be executed as you've set them up, and it either hits your take profit or it hits your stop loss. And then in a few hours you go back and you look at it and you see if there's any adjustments that need to be made based on strategy, not based on emotion. Like, so for example, if this one is hit, then you could say I'm going to move my stop loss up, but obviously using the extra take profits in this case, you know, you can use the protection function from the stop loss and say I'm going to use follow take profit. Then that's even more help to just walk away from this, right? I don't want to be checking this market constantly, because as soon as you start checking this market all the time, you're going to make adjustments, and you're going to continuously make adjustments based on what you see in the chart and not so much based on what your initial setup was. And that's also something that you could log, right? So if you're going to be really, really honest when you do the journaling, you're going to have to be really, really honest with yourself. And in the notes, you could say here, for example, like I didn't change anything. Like, this was my original thing. Or you could say I've made some changes, right? I've added this position later. And then you could see over time whether that's going to help you or not. When you do that, will you actually increase your profits, or will you decrease your profits if you do that? And that is how you empirically improve your trading. And this is how you can become consistent and profitable in the long run. Granted that your strategy gives you enough success rate with the risk to reward ratio, of course.
So this is like a cure for your emotions, basically, the journal, because it provides you the way of educating yourself, One second, to really understand what happens and basically try to analyze the data, as you mentioned, like time frame. Maybe it's better to use some specific time frame. Maybe it's good to use a specific hour of the market based on the session and so on. So that's the way to go. And I'm happy that you showed that thing with the protections, because I believe that protections that we are providing in Altrady is actually a very good psychology controller, because you are able to set your protection and say to yourself, okay, I don't know, I want to follow take profit or break even, and you know that doesn't matter what happens, you'll be or in profit or at the break even automatically, because that will be managed for you. So that's really powerful if you think about it. And another thing that I thought about it is actually, because we were talking before about signals when you should step away from your laptop, and you mentioned that, if you're like looking all the time on the chart, most likely you're gonna make a modification.
Yeah.
And that's the moment probably that you should think about to yourself, should think, that's a moment when I check a chart too many times in, I don't know, 30 times in 40 minutes. Probably you should, you should take your time, and leave that for later.
Yeah. But also, like, if you put that in your journal again, then you can see, like, okay, so if you make a change to your initial setup, so you say, okay, no, actually, it's not even a bad idea. Someone told me, like, if you're in trading and you see that your stop losses get hit all the time, maybe a good thing to do would be to move your entry to your stop loss, and then move your stop loss lower, and you'll see how many times your entry would actually get filled and turn into a profit.
Yeah.
So I've done this now, right? I should write that into my journal, and say I've moved my entry to stop loss. And by doing that, by logging that, if I've done that several times, then I can compare the profit from those types of setups to the positions where I left my entry at the initial setup, right? So I'm not saying that you should constantly change this, but I'm saying that you will see a pattern evolve from your journal. If you do not keep track of your trades, of your positions, and the decisions, it's more importantly the decisions that you make, because the positions are tracked, the profits are stored in Altrady, and you can always see them back. See them logged here. So that's there. But the decision as to why you entered this trade, that is not available in Altrady yet. I'm going to give the spoiler. I told Cata probably not yet. So for now, we're working with the Notion template, but we're also working on an integrated journal, of course, because
that probably for later with more information. However, guys, we are having these webinars because we have been in these markets and in this vertical for more than 6 years. So we know many things. We learn a lot of stuff. And we really try to educate as much as possible and try to help, because we see a lot of, people coming and just wanting to have tomorrow 1 million without consistency, without a specific plan. And that's why we're trying to, even if we are saying the same thing over and over, it's because we really want to be clear for every one of you that nothing comes without work. I mean, you need to put some work into it, not that much. And maybe at the beginning, it's a bit harder even to have your own journal, let's say, or trading or emotion. However, in time, that will become a habit. And when it's a habit, then it's something way more easier to do, and it will be a day-to-day task, basically. Something that you will do it without even thinking about it.
Yeah.
So
and you don't, like, a lot of people that I've seen, they keep a journal in paper, so they don't even use Notion, or Excel or whatever. They just keep like an actual diary journal. And they use that for years, so they can even go back to like a year ago and see what their mindset was then. Now, I mean, I'm saying that, but it's not something that I do for my other things in life. But if you go to a psychologist for mental health issues, which is a very good thing to do if you have them, then the first thing that they would tell you is actually to keep a journal and keep a log of your thoughts and decisions, so that you could learn from them when you look back at it. And it's exactly the same with trading. It's so super important to keep that journal if you're gonna become a professional or semi-professional trader. If you want to be successful and consistent, that's what you're going to have to do. It's just going to be one of the extra tasks on your list. But then you'll benefit from it, guaranteed. Like, even if you're not going to be profitable from day one. That's not what a journal does. Keeping a journal is not going to magically turn every position into profit. It's not.
No, but it will help you to answer many questions. Like, when I'm the most profitable, when I have losses, I mean, those are the questions that will help you improve your trading. And that's why you need to have a journal. And that's why it's really relevant and important to stick to it. So I'm sure that we kind of make people aware about the importance of journaling. But I do have a question for you, Ben, because that's a cool one, actually. So I'm thinking, like, what's your biggest emotional challenge in trading? If you think about like fear, greed, FOMO, impatience, or confidence. Or even overconfidence, actually, because that's another thing.
For me, it really comes down to patience.
Yeah, same here.
Yeah. It's not so much FOMO. Well, I've been.
Not anymore. At the beginning, it's FOMO. At least it was for me. Yeah.
No, but when I was doing my futures trading, because I started to try out futures trading, and it is connected here. And I was trying out some strategy. I don't even know if there. They were sometimes still based on FOMO, or FOMO and impatience is probably interconnected, because I want to enter into the trade, right? I want to make money, because if you don't trade, you don't make any money. So I wanted to do that, but then I also didn't have the patience to wait for hours to find that setup, right? I'm so used to having the base scanner that automatically takes these trades for me, and I don't have to wait, right?
Yeah, it's an easy task.
There is no emotion. There's no psychology involved. It's just like, okay, the base scanner takes base positions, and we manage them when they come in and they need to be managed. Right, and lately a lot of them have to be managed because the altcoins are just not really playing nicely as they have done in the past. But that's just a phase. It'll they'll grow out of it. That's what they say when you get kids as well. But that's how I've been used to trading. So I'm gonna be really curious about how my psychology comes back in when I start to do that smart money trading. Like, I've already tried it a little bit, and then again, patience was another thing. I would just enter the trades too early. I think I took 5 trades, maybe less. And luckily, because it's a really good strategy, 3 of them were actually profitable, and I think in my account I made back 50 or 60% in a month. But
that's quite good, huh?
Pure dumb luck, right? That I'm not going to take credit for me knowing this strategy, because basically my entries were based on like the move. Oh, okay, I see this happen, so the sweep there, and then on the pullback, I'm going to enter in here. I didn't even wait for anything, like nothing.
Thanks, George. We have George. Just a second, Ben. Sorry about that. So he says that I can always follow in real time, but I always watch the webinars afterwards. I'm happy with your webinars, and on this way you get to know Altrady better and better. Thank you, George. That's why we actually start to do these sessions to get more closer to you guys and try to answer any questions and also give you the possibility to know us even better.
Yeah, and also if you have questions, if you want to, if they're not on topic, it doesn't matter. Like we're just sitting here talking away.
Yeah.
We pick a topic, but we're happy to discuss questions about the trade form specifically. Like,
yeah. Do you want to say something else, Ben? Because I wanted to.
No, go ahead.
When we started, we made that thing. We were talking about the office when we were working together a few years ago. So for most of the people, they don't know me and Ben. We know each other for quite some time, and previously we worked together. And we were saying that at the beginning, everybody was from the company. They started with crypto because of Ben, because he started to develop the base scanner signal, and everybody was trying to find and understand what happens. And I do remember right now, because we were looking at the chart. We were in the office supposedly working, but sometimes we were looking at the chart, and there
was a lot of working involved at some point.
Yes, and people. I remember even now, Danny and Kevin, because we were looking. Even Tom. Yeah, now that I'm thinking about.
Yeah.
And we're like, oh my God, look at this, how it went. I remember it was with Binance, with BNB. Man, it was crazy when it went up, and we're like, everybody was, but at that point in time, everybody was doing everything based on emotions.
We didn't
have anything that was clear. We didn't know nothing. Like
this is also something like from what I remember from the Dutch group on Telegram, where in the last bull run, if we look at the price and if we compare it to this one, it is really different. If we look at it, we were there, but actually let's look at a 1 week one. So look at these moves, right? So many green candles all the way up. Just a minor pullback here, but so many green candles. But now
everybody was making money there. Yeah.
But now, for weeks we're already just going sideways and here, and it's like it's nothing in this part. Also, you see, there's a lot of hiccups in between. It's just different. And what I was saying to the users was like, okay, so because the base scanner was just like going crazy, like you could have 6-7 winning trades in a day with 5-10% profit. Because the altcoins were doing so well back then, and it was like it doesn't matter. Every position is just a winner. It's like, but do watch out, because this is going to end, right? So the euphoria that you feel right now, that will end. Like when a bear market comes, you will see more positions hit your stop loss or eventually go down to zero, well, almost zero. That can happen. Like if you don't manage it properly, that can happen. So if you think, it's going to hit that 10%, it's going to hit that 10% because it has historically hit that 10%. Well, in a bull market, yes, but when this reversal happens, not so much. Right? You get those absolute landslides. Let's see if we can find one from that's probably somewhere in the lower coins. Yeah, look. You get absolute landslides.
That's painful.
There's a lot of money to be made in these, especially when you use grid bots. Like if you're, because we also have grid bots for people that didn't realize. But you could like the sideways markets is perfect for grid bots, and a lot of those altcoins currently are well, if you compare them to the week. then it almost looks like they're going sideways. But some of them are just like, this is just a slow grind down. This is not great for Gridbot.
No.
This period's great for Gridbot. This period's probably good for Gridbot. But yeah, you don't want to stay in it. So as soon as you see that the bot goes out of your range, then you should probably consider stopping the Gridbot. Because you don't want to have your whole grid move all the way down. Even though the trading down works, it only works if it has a dip and then accumulation again. But if it just constantly dips, then the grid bots are not great. But here,
and
not a great market, moving sideways for days.
Basically, what you're saying, Ben, is like we're at the point right now in the market where kind of everything dips,
Mm-hmm.
And a lot of people right now, they're trying to sell because they're overwhelmed. They think that they're gonna lose everything and things like that. So we get back to the emotions part. But where I want to point out, it's something that you told me at some point in time, because I was saying to you, like, look, I want to buy. You never know how low the market will go. That's one thing.
No.
I remember even now you told me that, Cata, you never know. Nobody knows how low the market can go. So what you can do, there are a few things that you can do. One, you can DCA. So basically you can have a better average entry price.
Mm-hmm.
And second, you can expect to have a turnaround. And then you see that the market goes up, and it's better to have, because then you have a higher probability for market to go up.
Yeah, and about DCAing, if there's a great way of doing DCA. So that's my position trading strategy is highly or mainly based on DCAing. So in this case, what I would have done is actually have done is, so when you see this, you just set up 10 orders. Like with decent size, doesn't really matter. This will dollar cost average, right? So every time it will buy. Now in this case, it would have been a very quick position to fill all your entries, but that's fine. Like I have plenty of those that then recover and make decent amount of money. Because if you set up your take profit, then you could set up your take profit. In this case, it's set to fixed price. So that means that once the entries fill, so if the price all the way goes down all the way, then the take profit will actually stay there. If you that's okay if you think so, especially for Bitcoin, if you think that this level will be reached again. So we're gonna hit 100K again relatively soon. If that's your belief, then you could easily let that sit. But another way to do DCAing is then to get out at a fixed percentage, not a fixed price, but a fixed percentage. So you set the entry price like this. So now the target for the take profit is based on the average entry. So once these orders fill, the take profit will move down, ensuring that your percentage of profit based on the investment will always be the same. So with the 2% profit, then as soon as these fill, the take profit will move down and then be 2% above the break-even price, meaning that once it hits, you'll make 2% profit. But obviously, if this whole range hits, then it's 2% of the total position size. Otherwise, it's 2% of the $500 or almost $500. Let's make it 5,000, just an easier calculation. So $500 per order, 2% profit. So as soon as every order fills, then my profit will increase. The same. Every order is the same amount of profit, but with fixed price, of course, that increases. So if the price reaches all the way here and then goes there, then my profit is a lot higher. So this is classic DCAing. This is like taking advantage of this sharp price movement and then the recovery. So what we've seen from the smart money concept is that the price usually moves down in a swift move and then starts to slowly go back up. right? Or the other way around, where it goes up quickly and then slowly move down. That's a typical market movement. So right now we see this impulse sell-off, and we will see that the market will slowly recover. Now the base scanner algorithm that you can see on the chart would indicate that the price is going to go back here or here, and there's a high probability of it doing that. So in this case, might be a better idea to set it to a percentage. So right now, if this had happened, then my percentage would have probably been roughly around here, and then I would have gone out. But now it doesn't allow me to set that because I can't set my take profit below my entries. But once these are filled, then of course you can. And this is again, so for me, in terms of psychology and managing your emotions, this is pretty emotionless, right? I determine good support and resistance levels. Right, there's a nice gap in the market here. Well, actually, this whole area is just one big gap. There hasn't been a real correction yet. So you could set the orders all the way up down here, and you'll profit on the correction or on the move back up. So the first the impulse move, then the correction back up, and then you can profit like that, and you can do that all the way down, right? As long as you keep doing that, then you'll get nice charts. Unfortunately, my biggest chart that I was doing that for over 2.5 years, buying and selling like that on these spikes, and in the end, I walked away with $12,000 on just that market.
Nice,
which was in Bitcoin then, so. That Bitcoin has gone up in value a little bit more, but you can you can make some really good profits in the long run, right? And especially if you do it against Bitcoin. So if you do the Bitcoin markets, then doing this to accumulate more Bitcoin, you'll have a really nice amplified effect if Bitcoin starts to go to all-time highs again. Now, obviously, we're already at all-time highs, so the importance of trading against Bitcoin is maybe not as high as it would be on the bottom. But if you're on the bottom of a bear market, by all means start trading against Bitcoin, because you'll get crazy amplified results. And this is basically how I currently still do most of my trades. So the ones that I do manually, of course I have the base scanner running, but when I do it manually, because I like to stay in the game and still do some trades, I do that with Bitcoin to USDT, because I want to have more free cash to buy back on the big moves, and in the meantime make some nice profits. And then I do that on BTC USDT, especially at the top of the market, and then I make my profits quite consistently, really, because these moves happen all the time, like big spikes down, DCA in, and sell on the way up. And you could do that with more than one take profit, obviously. So you can, just as you scale in, you can also scale out and increase your profits that way. Also very much possible.
Sweet. That looks awesome. Yeah, I know you're trading like this for a while.
Yeah. You'll get like Christmas trees in the chart with just like lots and lots of arrows, and especially if they're red and green, it just looks like a crazy chart. Unfortunately, the market that I was trading is now delisted, so I can't show you the chart anymore. It was even on Bittrex, so Bittrex doesn't exist anymore.
Doesn't exist, yeah. Okay.
But that was my most beautiful chart, like just trading on the bottom of the market and insane spikes, like 20% spikes. Account building, they also call that. But
I see that we don't have any questions. I mean, if you guys want to know something, just let us know. Meanwhile, because I think, in a few minutes we should ramp this up. I don't know, Ben. Do you have any, recently what happened, it's a bit off topic, but I believe it's interesting what happened with Bybit, with the 1.5 or 4 billion.
Oh yeah, that's a crazy one. I mean, if you talk about psychology, that's a poo. Bybit showed some real strength there in terms of their composure and the way that they deal with it, because they just lost 1.5 billion in Ethereum, right? And coming from a security background, so me and Cata used to work for a company that creates safe logins. So logging into your government websites, logging into your bank websites, things like that. That's what we would. That's what we were working on, and obviously integrated into Altrady. But
That's
where was I going? Oh yeah, the way that they hacked Bybit, it wasn't really a hack. Like nothing was hacked per se, but they tricked the people that were allowed to sign for wallet transfers from cold storage, which was multi-signature wallets. So that means that more people have to be looking at that. And all those people saw the same thing, that it looked like a legitimate transfer. They transferred the money as they always do. They got complacent. They do what they have always done. Everything looked normal. And then in the end, it turned out that they were actually signing something completely different. They were signing the control over to, well, for what it appears, the Lazarus group. They basically could empty the wallet. And that's crazy. You know, all the security that they have in place with Bybit, and I'm pretty sure that they have it done properly. This was some level of psychological warfare with the people that were involved, like the people that were allowed to sign. They've been tricked, like properly tricked. Everything was. And
this was a really sophisticated engineering, to be honest. I mean, this is not something
but it's
that
not
you
technical,
see
right? It's not technical. That's the whole thing that people don't really understand. It's like how could this not be prevented? Well, this was human interaction, human hacking, really, like phishing attacks, making sure that someone does something that they normally wouldn't do if they know what they're doing. But in this case, you tricked them. Like the portal where they were doing that was somehow changed.
Yeah, it was incredible. What I found even more incredible was the reaction from Ben. Actually, Ben Zhou, the CEO of Bybit.
Yeah,
I mean, the way he handled the communication and the PR for that's a masterclass by itself.
Yeah, and you could see like Bybit is doing well still. They've kept their credibility. It's not an FTX repeat.
Yes,
because they claim and appear to be solvent, so they should be able to cover the losses, which is huge, you know. But I'm glad that they did that, and I'm glad that they are still in the game, because Bybit is one of my it's my second favorite exchange after Binance, but because Binance doesn't allow me to trade that anymore. Maybe with ways around it, but I do trade more on Bybit now than before. My 2 or 3 exchanges are Binance, Bybit, and KuCoin. KuCoin for the nice silly markets.
that's
I mean, you could go even crazier and you go to Maxi for silly markets, but that's no.
Well, depends. I mean, depends on what everyone want to do. However, as I don't see
but you can on those markets you can only use very small amounts and make big amounts, or make big percentages. But it's too much effort for me. I'm not comfortable doing that, or again, not patient enough to do that. A lot of people do it. You know, Signal bot on Maxi. Why not? YOLO.
Yeah. Before closing this, Ben, do you want to let people know about what's upcoming for Smart Money Concept, or do you have that already in place, or do you know something? Or do you want to have a surprise for them for Tuesday?
Well, it's a surprise for me too. Like again, I can't stress this enough. I'm the one learning this. Like Roman is just ahead of us. He's doing all the preparations and learning.
Okay, so
learning
then
learning
Roman
ahead
will
of
prepare
time. But
everything, and yeah, everybody will have a nice surprise.
when we go into these webinars, I'm in there blank, and I'm actually thoroughly enjoying them. Like participating in that, especially the last one where we actually did an exercise. And for the people that don't know that, the exercise is displayed here in Discord. So if you haven't joined our Discord, do that if you're interested in the smart money concept. We have the announcements channel where we show you the videos, the webinars, and we do the chat. And we can already see that some boss has already done his exercise where it was defining the lows and highs in the chart just to train your eyes, right? And that's something that I'm going to be doing. Like I'll probably be doing another live stream tomorrow where it's going to be very boring. Me on the chart just doing that. So I'm just going to...
That's fun. But what's relevant for people to know is that if they join to Discord, then in these channels we can also provide feedback. So we have people, sharing their charts and so on, and Roman and Ben can provide some feedback and communicate about what you're doing and so on.
Yeah, it's a really first steps into the building the community on Discord. I mean, we already have over 6,500 members on Discord, but there's not enough activity about trading, and this is what we want to change. So that's also why we're opening up this smart money concept chat, and really encourage you to come and learn with me at least. I mean, Roman's already had, but learn with me then, and make the same stupid mistakes that I'm making. I'm going to be making stupid mistakes.
Awesome. Well, I think we are done for today, Ben. Thanks to everyone. And see you the next Thursday with another topic.
Yeah, or Tuesday. I mean, Cata won't be there because he's still asleep at that time. But
US time zone. Yeah, that's true.
But me and Roman will be there, and we'll hopefully see you there.
Awesome. Have a good one, everyone. Bye.
Bye, everyone.